All right, good afternoon, morning, or evening, wherever you are in the world. So I'm just going to go over all the setups for Monday, 15th of May, up until Friday, 19th of May, which was last week. And I'm just going to go over essentially the goods, the bads, for every single day. So starting with Monday, the 15th of May. Okay, so daily time frame just before we can see that price had given already. We've seen obviously this initial session of rise, but it was also within a period of accumulation. So one could say that price was within 2 to 3 sessions of drop. And then if we take a look on the 4 hour on the daily time frame, right? Sorry, on the weekly time frame, right? Just prior to this week, it was pretty obvious that price had obviously taken out a major area of buy side liquidity. So therefore, sell side bearishness was the most optimal scenario. So let's take a look on just before the London Open on Monday. So just going to forward play up until 1 a.m. So we can see that just before the London Open, in terms of the liquidity targets, we have a next draw on sell side liquidity was this initial low, and the next draw on buy side liquidity was this imbalance. And the reason, of course, this imbalance is a little bit higher is because obviously in real time. So if I just forward play the next candle, right? So just before the London Open, we can see that the next draw on buy side on the 1 hour time frame is this imbalance, and the next draw on sell side on the 1 hour time frame is this swing low down here. So again, very simple levels. Again, very important to note that 1 hour is sitting on the 800 EMA. Also, in terms of where we are within the trending cycle, we can see that the initial expansion was down here, the market contracted. Secondary expansion, market contracted. Third expansion, market contracted, and then gave an extended low into the 800 EMA. So at this point, I believe a reversal was imminent. And I mentioned that, well, this is accumulation. This is the initial shift outside of the range, market contracted, and now we're in that secondary shift to the upside. So just go to the 15 minutes time frame then to identify what kind of setup we could have anticipated. Well, we can see that just before the open of the European session. So we have here the open of the European session, and then the next one is the London session open. So a second. So just this. All right, so this is London. Right, so just before the European Open, we can see this is the Asian range, and price had already given a bullish break outside of the Asian range right there, okay? And then obviously traded back into the range. So there's a few things to note of importance here. So obviously if this was, I do apologize, the initial Asian range is actually this range. I don't know why I moved my Asian range box. I think I was experimenting. But the initial Asian range is right here. All right, this is what I initially identified, and it's still correct. So it's A, B, C. Okay, so A, B, C, right? That was the initial Asian range, and we can see that just before. So if I just forward play this, we can see the price had given a break outside of the Asian range in the European Open, and the order block responsible for that break outside of the range is right here. So this is the bullish order block responsible for the break outside of the range. So if we then forward play this into the into the London Open, the projected obviously AOI is for price to trade into the bullish order block. That's the AOI, and we could have anticipated a continuation trade from the order block, or we could have anticipated a reversal if it's a BR5. But obviously, considering the 1 hour is in a reversal phase, and we've seen that extended leg, a reversal was imminent, and BRC would have been an ideal scenario from the bullish order block. Now we can see that for the duration of the trading session, price essentially traded into the H1 as well as the H4 buy side target, right, without trading into the order block. So at this point on Monday, there was absolutely no setup at all, and I personally didn't take a trade. So going into Tuesday. So going into Tuesday, so again, I'm just going to move my session open from Monday up until Tuesday. We can see that price on Monday had given us a session of rise, okay? So at this point, again, one of two things could have been anticipated because bearish is the predominant bias. So we could have anticipated price to trade into the daily BST and then a continuation from there, or we can anticipate another session of rise, right? So let's take a look and see on the lower time frame how we can make our projections a lot more accurate. So again, I'm just going to forward play this into the London Open on Tuesday, just before the European Open on Tuesday. There we go. So you can see very clearly that just before the European Open, price had traded into this low. Now, the reason, again, I have my imbalance here is because I did my analysis just before the open of the European session when price dropped. So at the time, price, the appropriate sell side target on the 4-hour was this imbalance right here. And the appropriate buy side target was obviously going to be the swing high up here. Okay. So if we now take a look at this on the 1-hour time frame, we can see again very clearly that price had delivered on so just before. So I'm just going to rewind this to the 2 a.m. candle. There we go. So we have European Open at 2 and London Open at 3. We can see that the next on buy side is the swing high and the next on sell side is the swing low down here. Now it's important to note as well that obviously price had essentially the previous day given that bullish session of rise. So we are within a session of rise on the daily time frame. But again, we can also anticipate some sort of a reset short if price was to trade into our daily buy side target. So again, a high time frame target is this daily buy side target, which is also where the 800 EMA was residing. So taking a look at this now, again, is about just waiting to see how price trades out. So we can see UK employment and unemployment rate pushed price away from the Asian range. So this was a bearish break outside of the Asian range, right? And then, of course, thereafter, AOI is to wait for price to trade back into the Asian range. And then we're seeking to essentially take a trade from there, right? So I'm just going to remove these so I can show you guys the real-time projection of how this setup played out. So essentially, in London Open, price quickly traded back into the Asian range and into the bearish order block. So of course, our first AOI is to look for an entry opportunity to go short from the bearish order block. Okay. So when price traded into the bearish order block, of course, we saw very, very nice price action. Price gave, of course, this initial low down here, and then broke below that low, making this a break of market structure. And then, of course, we're looking to enter at the imbalance. Okay, so we're looking to enter at this imbalance. So essentially what we can now see is that obviously our stop loss will go 5 pips above the high. So this is the initial entry opportunity that presented itself. Short position at the imbalance, stop loss 5 pips above the high. And the first profit target is of course going to be the recent low. That's a 1 to 5. And then of course the second profit target would be our daily sell side target below. Now we can see what happens here is that price traded into our entry point and then proceeded to move towards our stop loss. Now it looked like it was going to run, right? It looked like it was going to give us a rally, and then all of a sudden we got swiped out. Now in this situation, obviously it's very obvious what happened because price was so close to the daily. Price is now traded into the daily, which is a super high volume area, as well as the 800 EMA as well. Okay, so at this point, rather than panicking, the best thing to have done would have been to wait for a re-entry opportunity, depending on your trading plan, right? So because this is a purge above this hype based on the price giving that vector acceleration. So usually with purges, again, I just wait for price to do one of two things, to close below the 13 EMA again, or to give me another break of market structure, whichever one comes first. So we can see that price delivers another break of market structure after purging that high, right? So we have another secondary break of market structure right here with, of course, our imbalance right here. Okay. And then, of course, we still position our stop loss 5 pips above the high. And we're looking to re-enter with, of course, our profit targets still staying the same, with the first target being the recent low right down there. And then we're just going to adjust that second target ever so slightly. So we're just going to take a look then at the 5 minutes time frame. Just again, we're just looking for other areas price could trade to. So again, we can see that this is the H1 SST and the H4 SST from the previous trading session. And of course, the H4 SST also represents yesterday's low. So I believe yesterday's low would be the next reasonable target to aim for, right? As opposed to the daily sell side. So this is the setup in terms of a re-entry opportunity. So again, we would have taken a re-entry and then price traded into the imbalance and then hung around for a bit. And then there was obviously the retail sales, which is a red news event that kicked in later in the day. And that obviously brought in fresh liquidity into the market. And we can see that price obviously was pushing down and then it gave this move back up into our entry area before eventually making a run to the downside. So again, one would have needed to be incredibly patient and disciplined in order to have seen the fruits of this setup itself. Now, this setup actually did hit the profit target the following day, so you would have needed to have held this trade overnight, right? So I'll show you an example of what I mean by this, because the next day, essentially what we see in Asia, so we're coming into the European Open. I know it's a bit of a delayed stretch. Actually, I'll just put this on the 5 minutes. Wait, there we go. So we can see that coming into the European Open, price did deliver by pushing price outside of the Asian range and hitting a first profit target in the European Open, as well as the second profit target later in the session. So you could have held these positions overnight, or you could have just closed until you were still at a nice substantial profit if you just closed the position at the end of the trading day and then just waited until the next day to trade the next setup. So this was a very nice short. One would have needed to have re-entered this trade opportunity for you to have made some profit from it. So this was on Tuesday. So going into Wednesday, so we've seen obviously that price had essentially given us on, so I'm just going to move these around a bit. So we'd seen that price had given us a session of rise, but we'd now given another push into the daily BST, and then we've seen that session of drop. So at this point, we can anticipate the price is going to give us a bearish continuation to the downside, which is essentially a reset type setup. So going into Wednesday, so again, just going down to the 4-hour time frame, just going to forward play this to just before the open of the session. We can see that the next draw on buy side liquidity on the 4-hour time frame was this imbalance, a very small imbalance that remained open right there. And the next draw on sell side liquidity on this specific time frame is also this imbalance down here. Okay. Now, if you go down to the 1-hour time frame, we can see that the next draw on buy side liquidity on the 1-hour time frame is, so in a second, it's just going to forward play this. All right, so London Open, just downplay this a little bit, boom, just like that. Right, so the next draw on buy side liquidity on the 1-hour time frame, right, is this imbalance right here, and the next draw on sell side liquidity is going to be this low down here. Okay, so next draw on buy side and next draw on sell side. Okay, so now that that's established, I'm not sure what the slide's doing there. I'm just going to delete it. Now that that's established, I'm just going to go down to the 15 minutes time frame. Now we can see that the Asian range that was created on this day was pretty straightforward, where we obviously have prices been accumulating for the whole of Asia. And then just before the European Open, and remember, this is a continuation of the previous day setup, but just before the European Open, we've had price obviously giving us a bearish break outside of the range, and the order block responsible for that bearish break outside of the range is pretty much the same order block that it's in the same area as our H1 buy side target. So again, AOI is, if we're going to take a trade opportunity this day, we would have needed to have taken it from the order block itself. So again, just waiting for price to, so we can see that price started off by trading into these lower levels, trading into the H1, trading into the daily, and as well as the H4 targets, before eventually, again, it's waiting for price to trade into the order block. So in this case, New York session, price traded eventually into this bearish order block. So this is, again, a very important area of interest. So now this is how I personally would have traded this, because in terms of the targets that are in London, in New York, you can definitely still take BRCs to the downside, but you need to ensure that you're taking these BRCs to the London target. So even though London is traded to, for example, the 4 hour, the 1 hour, and the daily, you still need to ensure that you are taking your profits at the next reasonable draws on liquidity, which is going to be these initial targets. So if we take a look on a 1 minute time frame, right? Now, remember taking this trade where price had essentially delivered on a break of market structure right here. Right, so price has delivered on a break of market structure. So we had this initial low, the price contracted, gave a higher high, and it gave a break of structure, and obviously a classical break of structure. So in this case, the intra AOI was the last up close candle. So entry of this was pretty nice. So of course, we're selling last up close candle with a stop loss going 5 pips above the high. A second. And again, it's really trading in line with these London targets. So you could have set your initial target to the H1 SST, so that same imbalance, and then second target to the H4 SST. So again, because price has taken out these levels and is beginning to rally, a BRC doesn't necessarily mean that price might just keep on trading back to the recent low. BRC could be just price retesting these levels before a potential continuation to the upside. So again, a secondary target should go again at that H4, or if you're ambitious, you could aim for the daily, but personally, that H4 was the next reasonable target. So we can see that price, it was a pretty fast price action. Price moved into the H1 as well as the H4 target before eventually rallying to the upside. So again, if you had missed, again, if you hadn't really set these accurate targets, especially as a 1 to 3, 1 to 4, so the risk reward on these was like pretty good, then you would have definitely missed out on taking profits on these trades. So this is the right way to trade BRCs in New York, right? Because New York is a very tricky session to trade. That's why I personally prefer trading the London Open. But you need to ensure that even when you are taking the BRCs in New York, you are taking them in line with the London Open target levels. Okay. Right. So let's go into the next day. So that was on Wednesday. So Wednesday was a pretty late trading day. You would have needed to have taken that setup in New York for you to have seen profitability from it. So now going into Thursday, so we've seen that Wednesday was a contraction session. We've seen that, again, bearishness, price has taken out daily SST. Again, because we are within that bearish reset phase of the cycle, a bearish continuation, in my view, is still imminent. So if we go down to the 4 hour time frame again, so just forward playing this just before the London Open, we can see the next draw on 4 hour buy side target is this swing high. And the next draw for our sell side target is this swing low down here. So going into the 1 hour time frame again, so it's just keeping track of these levels. So just going to forward play this. You can see the next draw on 1 hour buy side is this imbalance. Next draw on 1 hour sell side is this swing low down here. Now, if we go down to the 15 minutes time frame, so just before the London Open, right? So just going to drag these lines up upwards. Right, so just before the London Open, I'm just going to delete these. We can see the price had essentially given us a bearish break outside of our Asian range. Now, again, just remember that, yesterday with tin price had obviously taken out this low and then came back up and then proceeded to begin what seems to be a bearish cycle. So again, this bearishness could be a continuation of yesterday's movements, right? So we've seen the price had essentially given us a bearish break outside of the Asian range, and the order block responsible for that bearish break outside of the Asian range is, of course, this order block. right, that I've just identified, and we can see that price in the Asian session had already sort of retested the bearish order block to the upside. Okay, so at this point, all we're doing is we're waiting for price to essentially deliver on a new structure for us in the London Open. Now, another way you could see this, and again, this is just I'll tell you exactly how I saw it and how one could have traded it. But another way you could have seen this as well is you could have seen you could have identified the most recent ABC, right? The most recent Asian range, right? So this being the A, this being the B, and this being the C. So this is just before the European Open. So let's imagine that this was your ABC. In this case, price essentially didn't break outside of the range until this candle. So with this candle being the break outside of the range, this becomes a purge scenario, right? So because why? Because price has taken out the high of the range and then proceeded to break below the low of that Asian range. So you would have interpreted this as a purge scenario. And as the purge scenario, price, you would have been looking for an opportunity to trade, obviously a reversal back to the top of the range, which essentially didn't really present itself. Okay. Now, the second way, and this is the main way that I looked at it, because I know that some of you guys sometimes like to go for the smaller ranges, and that's okay. But I also like to look at the context of the bigger range and see how price is moving in line with the most predominant range in the Asian session. Now, within this predominant range, price obviously gave a bearish break. This is the bearish order block. Price had retested that bearish order block, and in London, in the European Open, price had basically traded back. So I'm just going to, I'm not sure why this is there. So just move this backwards. There we go. And then I'll just move this here as well. So European Open, we're seeing a price that traded to retest this bearish order block for a second time. Now, it's highly unlikely price could retest it again. Now, again, a predominant bias is bearish, right? You could have seen this as a 1 minute VRC, as a 1 minute VRR. The reason being is because, of course, price had taken out, retested the order block in the European Open, and then taken out that recent low in the London Open, and therefore something like this, technically speaking, is what we would see as a break retest reversal 1 minute time frame. But this is what I mean by the break retest reversals, the break retest continuations. These setups must be evaluated within the context of the H1 as well as the H4 and daily bias, right? Because if you do have a very accurate bias on the 1 hour and the 4 hour time frame, the vast majority of the time you do want to be trading in line with that bias. So therefore, taking a reversal trade, right, against the predominant bias that we currently have at the moment would go against that bias. So if you decided, for example, to take this as a break retest reversal as a 1 minute time frame, so let's imagine you waited for price to take out the low of European Open, and then you took this as a break of market structure right there. So took this as a break of market structure, and obviously your interest was to have entered at the breaker, right, or the last down close candle, and the price came down, took you into the trade. You stopped going 5 pips below the low, right? Right, so let's say you stop going 5 pips below the low, and then price obviously would have given you that initial rally. Your first profit target should obviously have been so if I just put this as a long scenario, right, your first profit target should be, of course, these equal highs right there that was created in the London Open, and then you could have aimed your second profit target as, for example, the high of the Asian range right there, right? Could have aimed for that. So essentially what would have happened is obviously price proceeded to drop and you would have been stopped out. Now, let's say you did get stopped out. So you've had 2 profitable days so far, you got stopped out, that's fine. It's not an issue. But now let's say that you also wanted to trade in line with the trend, right? Now, this is a trickier setup. It's not something that I would typically personally take, but it's part of the market structure and understanding how the market plays along with each other. So if you wanted to have taken a bearish continuation, what you could have seen is obviously price retested the order block in the European Open, and then a move below this low would have been considered a break of market structure again, because we're looking for bearishness, right? So this would have been a 5 minutes break of market structure. And the type of market structure we have here is a classical breakout structure. So the AOI would have been, of course, this last up close candle, right? Right. So the AOI would have been this last up close candle. So what one could have done as well is, let's say you wanted to trade in line with the setup, with the bias on the H1 and the H4 time frame. You could have evaluated this as well as though, well, this looks to me like a break of market structure right here. So price in London Open would have come up to retest that bearish order block. And what you could have seen is this as a break of market structure, right? And of course, a classical break of market structure. So therefore, you would want your short opportunity to be at the last up close candle and your stop loss going 5 pips above the high. There we go. And then it's about now really nailing your profit target. So rather than aiming for the recent low, you'd have needed to have aimed for that H1 SST as your first profit target. The reason being is because the bigger picture of this, you're trading in line with the previous day's bias, where because price had given this purge of the recent high, we are anticipating price to trade back down to this low to continue the bearish cycle. So that could have been your first profit target. And then of course your second profit target could have been the H4 SST, which is obviously situated at yesterday's low. Okay, so this is the second way that you could have traded this. So again, what would have happened is price came down, took out the low, and you will have obviously been taken into the trade, right, before that eventual continuation to the H1 SST, and then later in the day, price proceeds to give that continuation down towards the H4 SST. Okay, and then hitting that second profit target for 1 to 6. So again, seeing something like this is really about being in tune with the market and really understanding the context of these setups, because you can trade the textbook setups and you can still yield, have a sense of profitability over a period of time. But going beyond the textbook is really understanding price action and understanding the context of these setups and seeking to trade the most appropriate setup, whether it's a BRR or a BRC, in line with the H1 and the H4 bias. Okay. So that was on Thursday. Now let's go into Friday. Right, so going into Friday again, so we're just having that daily adjusting that daily SST to the swing low down here and moving our daily BST just a little bit higher. Right, so going into Friday, what we can see is that, so if I just forward play this to just before the open, you can see the next row on buy side liquidity is the swing high, next row on sell side is the swing low down here. If I go down to the 1 hour time frame, again, just looking at the same thing, I can see the next draw on. So if I just forward play this once, next draw on buy side liquidity is, of course, going to be the swing high, and the next draw on sell side is the swing low. And then if I go down to the 15 minutes time frame, you can see very clearly that obviously price has given us this initial Asian range. So again, what we're looking for is that setup or that opportunity to present itself that would allow us to trade in line with that reversal bias, because now what we've seen is that price has given us a bullish break outside of our range. AOI is of course going to be this bullish order block. So until price trades into that bullish order block, there wouldn't really be any opportunity for us to trade. Now we see that price is traded into the order block. So at this point, we're going to the 1 minute time frame and we're looking for the opportunity to take a position. We can see that at the bullish order block, price gives us a 1 minute break of market structure. Now, I didn't take this trade on this day. The reason being is because there was just one confirmation, which is the shark fin confirmation that wasn't met. And so one of my extra filters that enables me to ensure that I'm taking the right entry. But let's say that you were just taking a price action confirmation. So you weren't looking at the TDI, you were just taking a price action confirmation of a break of market structure. Price traded into the order block, gave a break of market structure, right? And then, of course, you had a classical break of market structure. In this case, with price, your AOI should have been the last down close candle. So in this case, your last down close candle is down here. This is your bullish shoulder block. And then stop loss going 5 pips below the low. And then obviously you're looking to go long from the last down close candle. In this case, your first profit target should have been the recent high. It's a nice 1, 2, 3. And your second profit target should be so just above the recent high, remember at the time. So if we go to the 15 minutes time frame, we had obviously this intermediate high target. So what one could have done is could have aimed for that intermediate high target for a 1 to 5, 1 to 6. Okay. Now if we take a look and see what happens, right? You can see that already price has traded into one's entry opportunity. And then after that, we saw price obviously began to rally, hit the first target at the recent high. And then later in the trading session, price hit the second target just at the intermediate high. Okay, so it's again pretty nice. So 1 to 3, 1 to 6 opportunity. So we could have got at this trade with 1 to 4, 1 to 5 out of R. I've taken 50% from both profit targets. But again, I personally didn't take this trade because again, price hadn't delivered on one critical confirmation on my TDI. So that's it for me for today in terms of all the setups for Monday to Friday. Now, there's a lot of exciting setups with very nice movements that took place last week. So again, super excited for what's to come this week. So I personally recommend for you guys to go away, study last week's setup, use it to improve your understanding of how price flows around the Asian range in the London Open, and apply your mistakes. Okay, learn from your mistakes, learn from your successes, and use it to have a better trading week ahead. All the best, guys.